The 8th edition of Aditya Birla Sun Life Mutual Fund presents Voyage 2021, partnered by ET Now, was recently conducted digitally, where discussions were held on the changed reality of global business regardless of the shape of the recovery. On this episode of Voyage, industry stalwarts discuss how equity markets will fare in this complex and fast-evolving world after making a remarkable comeback post the COVID-19 lockdown. Let's listen in.
In last 12 years, we've seen all shades of human behavior apply to the market. What do you think is the dominant flavor right now, and what will dominate this year?
Let me welcome all our viewers and our partners to this Voyage 2021. So last year was, it was a kind of a two half, right? First half, where we've seen bull and bear and bull markets in 1 year, right? And in many ways, I think it was extraordinary. And especially for fund managers like us, the kind of volatility what we saw, it was really a difficult period. But I think coming back, I think as we step into this decade and look forward, I think we are filled with a lot of optimism. I think really from pessimism, I think we have moved to the other extreme. And there are multiple factors to that. So in this environment of abundant amount of liquidity, low interest rates, we've seen the reflation of the economy very sharply. It's almost a V-shaped recovery, which has been there. And India also, while India was slightly behind, right, because we had extended period of lockdown, we also seeing that play out. And more importantly, I think from India perspective, we have been actually going through a slowdown even before the crisis. But as we step into this decade, we've seen this government actually, and especially after this budget, I think there is a big change in the overall narrative what we are seeing, right? Earlier, the focus was more on fiscal consolidation, trying to take care of certain issues which were disruptive. But now I think the focus is clearly on growth. And the budget also allowed for fiscal room to ensure that growth comes back. And we've got fiscally, the government will be accommodative at least for the next 2 to 3 years. And on back of the foundation what we have created, right, the reforms, I think we should embark on a new growth journey from here. And earlier it was mainly driven by consumption in the last 5 years. I think investments are also, we think, will pick up. Various efforts taken by the government to stimulate investments through the Make in India initiative, the production-linked incentive schemes. And we had a panel yesterday, right, about the manufacturing panel, and they talked about all these steps which are taken, which will actually be another pillar of growth, right? So we have consumption, which is there, investments, which was kind of going slow and declining actually in the last 4 or 5 years. I think that can revive. So all these things are signaling to us that we would actually see GDP growth in the coming decade, to be somewhere around 7% or even higher, 7 to 8%, which is our potential growth rate. And the last decade, actually, we were going slightly below that rate. And that optimism is what we are taking forward into this decade. And that is going to fire up the corporate earnings, profitability, and we have made a good start to this calendar year.
The general fear amongst this attendee audience and a lot of audience whom we interact with and a lot of unit holders and investors is, has the train left the station? Is it too late now?
So I would say definitely people haven't missed the bus. Even this is also a good time to invest, and that's what we are seeing. Even from here, investors will make decent returns. When I say decent returns, means say around 10 to 12%, which is not bad in the context of where interest rates are and where interest rates are going to be in the medium to long term. We are seeing a big emergence of emerging markets going forward. Last decade was a decade for developed markets. Developed markets did fantastic, and the US, which was a large market, has given almost 12% return in dollar terms. India has just given around 3% returns. So actually, if you just come back, to ask the question, there is still a lot of room for India to expand going forward, right? Our dollar returns have been just 3%. So I would say foreign investors like growth, right? While globally we've seen growth recovering, it's only transient. It's been propelled by the fiscal stimulus, right, and the easy monetary policy in the developed markets. Once that starts to pull out, you will see growth coming down. India, on the other hand, has got structural drivers for growth going forward. I mean, we have given a fiscal stimulus, but not to that extent. We have cut interest rates, but interest rates are not zero, right, in India. They're still pretty decent. So I think in India, in the current context, if we grow at around 7-8%, I think India will be the fastest growing economy. I mean, the last decade, it was China which was driving the growth in the emerging markets. I would say in this decade, it will be India which will be driving growth in emerging markets. China growth will probably be around 6% or so.
So, Mahesh, let's spend some minute or two in discussing a classic quote which we've often discussed, but somehow a lot of people don't implement. And that quote is that in a bull market, the biggest risk is the risk of not participating. And in a bull market, more money is lost while waiting for the correction rather than when the actual correction occurs. We've seen that what happened to the markets in the run up to the budget, they corrected 5%, but once budget was applauded by the markets have gone up 10%. Do you think that is one mistake? People who are attending this conference, people who are not investing right now and waiting for the correction that sasta hoga to lenge, are they missing on this lifetime opportunity? Because when the correction will occur, it may give you an entry point, it may not give you an entry point, but the correction is not going to be very severe.
Yeah, I think people have been waiting for that correction, I think, for the last few months. And that's been apparent in terms of the flows, what we are seeing into the mutual fund, which has been negative. I think waiting for that correction, you never know, I think, when that will come in. And see, you are waiting for the big picture, right? If even from here, okay, as I said, okay, we have not missed the bus. Okay, we are probably just about starting to make a beginning in terms of boarding the bus. The journey is still long away, and the returns in the medium to long term, as I mentioned earlier, looking at the kind of earnings growth we are looking at and looking at where the market is, in the P multiples are expensive, but on price to book value, market is still near the long term average. So it would be important for investors to start investing. If there is a correction, you can put in more money, right? But if you just wait for that correction, I think it will you will probably miss the bus, and then it's difficult to catch a running bus, right?
Mesh, how would
I
you
would say the SIP is the best route. I think many people have. I think in India we've seen this SIP culture pick up pretty well in the last 2-3 years. I think one should continue to do that because that has showed that even in investors, okay, I remember, I mean, we just look at the data, people who came in at the peak of the bull market, right, in 2008, and continued with the SIP from there, they have still made almost 10 to 11% returns.
just make that point again, Mesh? It's an important point. If you came at the peak of the bull market 2008 and then markets corrected 50%, you did not cancel your SIPs, you've actually made a double-digit return.
Yes.
So more money is made. I'm bringing this point out perhaps on behalf of Mahesh and something that is a channel which we endorse, that more money is made by spending time in the market, by not really timing the market. Always remember that SIP for an average investor is the best route. Mahesh, what should one not do in this decade? What are you planning not to buy, not to invest in, so that you can maximize returns? Because investing is also about avoiding mistakes.
Sure. No, I think what we have learned in the last years, many years at least in my investing, is that I mean, there are various opportunities you get in the market, but I think betting on the wrong company, betting on the wrong management is the biggest mistake you can make. I think sectors, you could see sector rotation happens. Okay, a sector could be bad for a couple of years, 2-3 years. Okay, it can come back. So I don't think I will avoid any sector, right? A sector which is not done well in the last 2-3 years, probably it's time for it to invest. Like for example, pharma sector didn't do well for the last 2-3 years. And a year back, we went aggressive on the pharma sector. We launched a pharma fund, and that gave almost like 70% return. So I think the biggest mistake is to really backing the wrong company and the wrong management. And the markets have been very discerning, right? Wherever companies have failed on corporate governance, promoters have misallocated capital, markets have punished them heavily. And the Ps have derated and the companies have not been able to really come back. So I think that's the only, mistake or what I would stay away. Not only this decade, but I mean, that will be the mantra really to follow at any point in time.
Are you pleasantly surprised with the numbers what banks have reported? Because at the peak of the crisis, it appeared that NPAs will go higher, retail delinquencies would be in record high. Bankers themselves were running for cover, they themselves were raising capital. But look at the numbers they're reporting.
So yeah, I mean, during the COVID crisis, I mean, the bank stocks got beaten down the most, right, initially, and see, the banking sector went through the large corporate NPAs cycle 2 years back, and banks were kind of stressed, and they were coming out of that. And COVID crisis actually put a test on the retail credit cycle, right, which had done very well. Last 10 years, retail credit has behaved very well. And this was a true test for the retail credit portfolio of the banks. And I think coming out of this cycle, we've seen that that's behaved fairly well, much better than expectations. I mean, overall NPAs, one would expect gross NPAs to be around 4 to 5%. I think they would be around 2% or so. So I think the overall NPA cycle, especially the retail credit cycle, has come out with less scratches, I would say. And the recoveries, bank recoveries are now back to around 95, 97% or so, except probably in a few sectors like the microfinance sector or unsecured credit, and to some extent in the small and medium enterprises. But by and large, it's come out well.
Welcome back to Aditya Birla Sun Life Mutual Fund presents Voyage 2021, partnered by ET Now. The next session engaged the industry experts in conversation about the finer nuances of a robust portfolio strategy and what constitutes a worthy portfolio and how can these truly secure your financial future. Let's listen in.
You know, at a time when you've got the markets almost rising up like an albatross from the ashes, from the March lows, you really wonder as a portfolio strategy whether there is any need to realign or not. And we've got three experts today joining in from the house of Aditya Birla Mutual Fund to really analyze that. They represent value, growth, and quality. So I'm going to dig deeper as to how is it that we can realign our portfolios. Ajay, if I could start with you, why fix it if it ain't broken? You know, that's the question at every portfolio investor's mind right now, that you've seen such handsome returns. The market has time and again told you that irrespective of any hue and cry, of any calamity, pandemic, whatever it may be, the market is a future-looking beast. And that's already priced in the growth and the economic recovery. So do you really need to realign your portfolios at this juncture?
What we have seen time and time again, that markets tend to align with reality. So less money to invest in the stock market directly, but more money to spend. And so what will happen is like fundamentals and technicals will tend to align, or 2021-22 mid will be a period where reality check will happen. And so that way it is.
Anil, I want to get you in here. While, you know, Ajay has established that, yes, there is a need to now realign your portfolios. What out of these three is going to win eventually? Is it going to be growth? Is it going to be value? Or would you say, don't use your minds. There is no valuation metric in this market. Just ride the momentum.
No, I don't think, we can generalize, just to play momentum. Yes, in the short term right now, when we see a lot of money chasing, returns basically across the globe, right? You have very, very low interest rates. You have huge amount of fiscal and monetary stimulus, depending on which country we're talking about. And the most fungible thing in this world is, like money, capital. It just moves. And we're seeing huge amount of inflows in India. So it clearly seems like a large momentum market, but let's not forget that, from an India perspective, we managed the COVID pretty well. Nobody had expected growth rates to have bounced back the way we've seen growth rates, consumption, infra spending, etc., coming back so quickly. Nobody had anticipated, it's been almost 5 or 6 years, we've tried fiscal consolidation as far as this government is concerned. We've now taken this opportunity to say that the priority is growth, and we've given ourselves a 5-year room window where we are okay with some higher fiscal deficit.
Satya, I mean, world over, it's The large is only getting larger and it's becoming a giant whale. I can go on with the list from an Amazon to a Tesla and on and on and on. Similar has been the theme in India as well. But since you're the more bottom-up guy, where are the hidden gems in this market?
See, as far as hidden gems, if at all, if I have to go and find hidden gems, I think hidden gems are there in the tech sector in India, which are currently in the private space. I am not talking of tech. I would differentiate between IT services and tech. In India, we tend to confuse both, but IT services are separate and tech is separate. Tech is mostly, apart from 2-3 companies, are in the private domain. And I think this year you will see a lot of tech companies coming in for IPOs. So that is when public investors have to get used to investing in companies with valuations which maybe they're not used to. Maybe investing in companies which don't make money with multi-billion dollar market cap. So I think that is where the hidden gems are, which till now the public investors don't have access to.
Going by the last commentary of the RBI governor, it seems that the RBI is going to take whatever it takes, even if it be at the cost of inflation, to try and keep the economy in the growth territory. Where is it that you find value in such a scenario? And would you believe that cyclicals will continue to be in favor, irrespective of the inflationary impact?
We actually evolved into a technological world where new and new technologies are coming up, and the inflation is almost getting killed. So it may be local to few geographies, but on a global scale, probably inflation, you may not get inflation for a really long time.
Anil, is there need to tactically realign your portfolio? Are there pockets that you need to now say, I've made the money, it's now time to get out and increase allocation somewhere else?
I won't use the word tactically, but yes, sure. There is, you have to sit back at all point of times whenever there's an important event or an important policy, globally or locally, and you need to really understand if it's going to really change the earnings trajectory for a particular sector, a particular company, and if so, sure. Then should it be a part of your portfolio if it's not already? So yes, as I said in my earlier conversation with you, I think clearly, without a doubt, India is moving towards a more focus on growth, be it from the government or be it, from the RBI itself, as you yourself mentioned. And within that perspective, with the kind of, interest rates that we are looking at right now and likely to continue, even if it moves up, we are unlikely to go back to the old interest rate regime that, we were in with very, very high levels of interest rates, choking demand and choking, further investments. That's unlikely to come through, at least in the medium term. And if keeping that in mind, there is no doubt that you will need to realign your portfolio to some degree to accommodate some of the stocks that you may have not earlier bought.
Next up, we have a power-packed panel discussion about the key trends seen in the Indian markets and how the focus on small-cap stocks can give very good returns, provided they are chosen with care. Let's listen in.
Great to have all of you with us. I wanted to get started with an overview, really, of the fund, how you go about the selection process, what your outlook really is. It's a lot of questions all bunched into one, and I know all of you will add a different perspective. But to begin with, Nitesh, let me come to you. If you can share with us really an overview and why the small cap fund, what the thought process is, and then we can dive in from there.
Since last 1 year, the small cap fund, the Aditya Birla small cap fund, has been managed by the analyst team. And as you may be aware, as a team, we are like 10 people covering different sectors. I am a sector generalist covering the mid and small cap stocks, apart from a couple of sectors. Effectively, what we have done as a process is a certain allocation for each and every analyst is there. And only the high conviction, absolute return ideas are, part of that portfolio.
Continuing with a sense of the overall picture, Chanchal, let me also come to you on that, because would love to learn a little bit more about, the process and taking off from where Nitesh left off.
So thanks, Abha. So well, investing in the small cap, the most important thing which we evaluate and the bigger importance is given to the management quality. It's very important to back on the right management and the right business. We have an internal process wherein we have a management scorecard and we give various buckets where we define how management is on various buckets, right from the accounting policy to quality of disclosure to quality of board and the team and the financial discipline and capital allocation. We have a set of a benchmark and we evaluate all the management based on this benchmark. The other important point where all the analysts focus on the earning growth, the underappreciated thing is the capital allocation. The most important thing, in fact, I would say the capital allocation. If you're generating a huge amount of cash flow, where are you allocating those cash flow? Are you investing in the right sector or are you diversifying into the sector which is not complementing your sector? So capital allocation becomes a very important thing. The other learning which we have from last 4-5 years is when you're looking at the company, you should also look at promoter pledge. And why is promoter raising money if he's raising money for other businesses which he has?
Dhaval, investment is, of course, more about the process and following it with consistency. So tell us a little bit more about the process as well. We'd also love to hear from you.
Thank you, Abha. And I think Nitesh and Chanchal has covered few points really well. So maybe, first of all, very good evening to everybody. Just to tell you, on the outset, we follow an investment universe concept. And what do we mean by an investment universe, right? The investment universe at Aditya Birla Sun Life AMC, we have close to 380 companies, which is largely covered by the 10 analysts. So approximately 35-40 companies each, well covered. We have to focus on getting detailed financial model analysis. We discuss these companies. And not at any point in time that any particular company can be introduced in the universe. So there is a thorough process where a company is discussed, whether it's an IPO or a new ideation. The analyst role, right, doesn't end only at ideation or bringing the company in the universe, which thoroughly goes with discussion with the entire fund management team. But it goes, the real work begins there.
Kunal, on the IT segment as well, given the kind of outperformance we've seen in IT over the last 3 years, what are the kind of return expectations that one should have? And I think there are a couple of questions also coming in on the kind of scope of investment there.
So from a, let me address the second question first with regards to the scope of investment. So IT in India, technology, essentially we've so far been able to invest in the space on the IT services side in particular. And essentially, that has been a story that technology spends globally. What's important is that, over the next coming decade, I see that the investment scope in the technology sector is going to widen. We'll have, so last couple of years, if you see, there has been, companies who have been domestically focused, who are in the internet slash, platform play, okay, and they've done really well. Looking at the success, we do see that, there will be more companies who are go public, be it in the, large, so media reports do tell us about, large food tech, insurance kind of companies are planning to go big. So, while the proposition of the IT services will continue to be, solid, but I think investors will get opportunity as new companies come and, the whole digital India, right, what we've been talking about, that there has been a digital wave in India and the whole transformation is happening. So we'll see, domestic focused technology companies also coming in, having investors getting that opportunity.
Wonderful. Gentlemen, thank you so much for sharing that with us and for coming together today to really give us an in-depth, look at really what goes on behind the small cap fund. That was very meaningful. Thank you.